Hey, good morning, everybody. Welcome to Wednesday. With Memorial Day, it kind of messes you up. It's Wednesday today, folks, May 29th. Thanks for joining us today as we get ready to speak with Dave. But I do want to remind you of our free report that we've got to give out in terms of what's happening in the marketplace right now. You know, I don't know if you remember, but I sure remember what 2008 felt like, and how it affected folks in their retirement strategies. So, you know, I don't want people to have to live through that again. That was a lot of volatility associated with that Great Recession. So, think about it. Today, you're a decade older. A lot of folks are getting ready to retire, thinking about retiring. They're closer to retirement. And so a similar economic downturn could really affect your portfolio. So we've put together an Understanding Market Corrections report. To get your free copy, all you need to do is text the word market to 863-285-3815. Just text the word market to 863-285-3815 to get your free copy of our report on understanding market corrections. Hey, Dave will be with us momentarily. Just hang tight.
I'm not going to wait for nothing. I'm just going to talk. All right. We're at 8:41. It's 19 before 9. Time to check in on your money. I'll give you a fair warning. It's kind of like a spoiler for the Game of Thrones. I don't have a whole heck of a lot of good news to share with you today. I'm going to cross my fingers that Phillip Statler does down at the offices of Statler Financial Services. Downtown Sebring, we go. Phillip, do you have any good news this morning? I don't see much.
Dave, I wish I could be on the other end of good news, but at this point, I'm not seeing anything. The big thing I see today is the report about interest rates. And we talked about them yesterday and how there was this inversion between the 10-year and the 5-year and different things there. Well, it got worse overnight and this morning.
Yeah, it really. The 10-year Treasury bill this morning, from my number, trading at 2.23%. That's 6 basis points cheaper than the 3-month Treasury bill, and that's exactly the opposite of what's supposed to be happening.
Well, it is. When I look at it now, the 3-month Treasury bill is paying more than anything up until the 30-year Treasury, which is just very, very, very unusual. And so, a matter of fact, they say this is the first time since the financial crisis that we've seen this kind of disparity between the 10-year and the 3-month.
And that
Treasury.
just does all kinds of weird things to the bond market. And frankly, the bond market's getting more important because with all the volatility in the equities, a predictable bond market gets more important. And this is about the opposite of predictable.
Well, yeah, and it does show that the volatility within the stock market is causing people to leave and go to treasuries. And so that pushes the price up, which puts the yield down lower. But yet I was looking at the different foreign currencies in the foreign government bonds, and we are still, other than Italy, and we know why Italy's is so high because their economics are in such a disarray, but we still have the highest 10-year out there.
Really?
Other than Italy. Yeah, other than Italy.
Well, isn't Europe still running incentivizing and keeping interest rates artificially low too? They're getting a little bit of government help as well, aren't they?
Well, they are. I mean, you got the Germans still in negative territory, negative yield for their 10-year. You got the French just barely in the positive. So yeah, they are still trying to help their economies where we were 10 years ago.
Yeah, but it's still we look at the notion of 2.25% and less in the 10%, and you can do better than that on the 10-year. The 3-month Treasury bill is paying more than that. The other indication, I was advancing this theory the other day, that the yield curve in the bonds indicates that a lot of the smart money, the guys with the really serious research budgets, they're seeing this as being more than a 3-month hiccup because they're buying the mid and longer term bonds now as a flight to safety. And that also kind of gives reason for pause on equities, doesn't it?
It does. There's all kinds of little signals out there that are giving us some concerns right now of what's going to happen with our economy given this trade war as it continues to escalate.
Understood. You were talking about one of the Japanese news or the Chinese newspapers was saying they've got a few things in their pockets. Some of them we've talked about in the past, like what would happen if China decided they wanted to get out of U.S. government debt, either call the debt or sell it off. That was one of the tools that newspaper mentioned, right?
It was, they're talking about the 3 trump cards that they had in their deck, and that was one of them was to be able to sell off their U.S. government portfolio of debt, which is about $1 trillion. And then, so what were the other 2 on top of that? One was banning the export of rare earth minerals, and so evidently they have one of the largest supplies of that. We don't import a lot of it, but it's very important to our technology sector in terms of building chips, our military technology. We use that rare earth mineral to build those things. And then the second thing was they could block U.S. companies from accessing the Chinese market. Now, they said that's not a real big deal because most companies, it only accounts for about 14% of their revenue, but it would basically eliminate growth in the U.S. Economy. Those companies that are seeking growth outside the United States, it would basically cut them off at the legs in terms of continued growth.
So what the tariffs on the saber rattling hasn't done, they could do just by legislation.
Exactly. Yep. So that's what they're looking at there. And the hopes would be that the companies would start lobbying Congress to override the president to do away with these tariffs.
Understood. So basically, the trade war continues to get ugly. And when all of that happened yesterday, it ended up giving us a decidedly down day on Wall Street. The Dow fell by 238 points yesterday. NASDAQ fell by about a little under 30. And the Standard & Poor's down by the better part of 24 points. All told, it was a decidedly negative day. There are a few companies that are reporting that might give us some good news, but I'm not hearing a lot of good news out of them either, are you?
Well, there's kind of a little bit of a mixed bag here, Dave. We've got Dick's Sporting Goods, the big sporting goods retailer. They beat estimates by 4 cents a share. They also beat revenue, and their same-store sales were flat, which doesn't sound good, but the analysts expected it to actually decline by 1.3%. And they raised their full-year outlook. So really and truly, Dick's Sporting Goods looks like it was kind of hitting on all the cylinders today. They're not getting a huge bump on that. They're up about 1.5% after being down almost 2.5% yesterday. So they're getting a little bit of a bump off of that this morning. Then we had Abercrombie and Fitch. They lost 29 cents a share. That was better than expected, though. They were expected to lose 43 cents a share. But revenue was ahead of estimates as well. So a lot of good things there. Their same-store sales, however, missed by a little bit on their same-store sales. They're getting beat up pretty bad this morning. They're down 16% before the market opens up. And then the last one I have is another kind of luxury line. It's called Capri Holdings. Now, that doesn't mean much to most of us, but it used to be called Michael Kors, and everybody will recognize that name as a luxury line of goods out there. So they beat by 2 cents a share. Revenue came in above forecast. They had really some strong sales in certain sectors. Their Versace line and their Jimmy Choo brands all had great years or great quarters. However, they gave weaker than expected guidance for the current quarter. And so they're getting beat up this morning too, down a little over 6.5%.
I was wondering, as I was having them on the top of my big loser list, and all you were doing was throwing hearts and flowers. What'd they do wrong? It was guidance, right?
Yep, it was guidance in their case.
All righty. So resetting the table, bad day yesterday. Enough said. 45 minutes before we open, I'm betting that we're going to be looking at more red ink this morning, aren't we, Phillip?
Yeah, not a good day. We're seeing a lot of red ink across the board. The Dow's down 0.75 point right now, which is 192. The S&P 500 is down about 6/10, $18.35. That's putting them way below the $2,800 mark. And then the NASDAQ's down 60, which is 0.8%. And so all three of those major indexes getting hit. The gold and silver are going up about 0.5% this morning. And crude oil is where we like it to be, Dave. It's down, way down below 60. It's at $57.44 a barrel.
Yeah, I just don't like the reasons why it's going down now, because it's expectation of reduced demand, which really isn't what you want to see, right?
Exactly.
Well, we'll take the gas pump impact any day, even though we don't like the cause. Asian Rim markets were in a sell-off last night, kind of following suit an hour yesterday, and it looks like we're going to keep the cycle today. Europe also selling off. They're really tanking. All the major indexes in Europe off by over 1.5% this morning. A big chunk of that concern over our inversion on our treasury rates, which we discussed earlier. Phillip, stability in a retirement fund sure sounds important right now, and a lot of folks got to be saying, where is it? How do I find you on the phone to find it?
It is, Dave. It is a lot of volatility. And so, again, I want to mention, like I did yesterday, about the free report we have on understanding market corrections. And all you have to do to get your copy is text the word market to 863-285-3815. Hey, if you miss that number, all you have to do is go to Facebook, to our page at Statler Financial Services, and this video comes up, and there'll actually be a hard thing you can see there, and get the text there. And then call our office, schedule an appointment for our x-ray report at 382-0037. Join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here again tomorrow morning, live and direct on 105.7 Light FM. And Lordy, can we see some green ink maybe for tomorrow? Doesn't look like today, does it?
No, it doesn't. Hold tight. We'll see what happens today and let you know what it looks like tomorrow. Look forward to speaking to you tomorrow. Have a great day, Dave.
Thank you, my friend, and welcome to the roller coaster. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Again, I want to thank you for joining us today. I hope that you got some vital information from our conversation this morning. Again, I want to remind you about our free report on understanding the market corrections. They are important. I mean, we're in the longest bull market we've ever seen. And so I think this is an important topic that people need to understand. Text the word market to 863-285-3815. Hey, have a great day. I look forward to seeing you again tomorrow.